Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now, as usual, a couple of words on the gold market. As you can see, the gold market has come down a bit. It's not very active trading here in the recent times because in general, the sentiment and the fundamental data stands the same. So nothing really, some big rumors or something of that sort right now in the markets. So if even some demand exists on Asian markets from the individuals on the jewelry and some physical gold, then it's probably really insufficient to trigger any sizable retracement right now in the gold market, and probably this demand is absolutely not sufficient to trigger any bullish action here. That is confirmed by recent data on the SPDR fund and the CFTC report and so on. So right now, I think that the major event that will and probably definitely will make an impact on gold market will be next FOMC meeting, because all of you guys probably know about the research that was released by one of the Federal Reserve banks that has the hint on the possible earlier rate hike and a more hawkish policy from the Federal Reserve. And by this statement, investors do not exclude the chance that some more hawkish rhetoric will be on the next FOMC meeting that will point on earlier possible rate hike in the United States. And as all markets across the board have come to motions, I mean the US Treasury bonds, the yield have jumped really significantly yesterday. Australian dollar, as we have discussed today, also shows the closing of the carry trades. It's really a significant plunge in Australian dollar. That probably not just a rumor. So the big investors probably know that this should happen, and if this really will happen, that will be really a strong impact and really a real hurt for the gold market, and as a result, market could slump really significantly and could pass for the 1240 easily, because 1240 is just the lows. It's right here. It's nothing more. It's not really significant level, just the technical level where market has found the support previously. We know, guys, from now long-term analysis on the monthly and weekly charts that in fact market have the 1180 support, and the next support will be below 11 even, so slightly higher than 100 from the 1000 point. So recall our butterfly on the monthly chart and on the weekly chart, and recall our stop grabber on the monthly chart that we have discussed week by week. And it's still valid, and you can see that market is just conforming and by the action. If market will continue more moving down on the September, that also will let us to speak about the possible bearish dynamic pressure on the monthly chart, and that is not it's a joke, guys. The bearish dynamic pressure on the monthly chart is a really significant pattern that could lead to the really serious consequences on the gold market. That's why, as market has stopped yesterday just $6 higher than the previous lows, and this in fact has happened below the significant level. So market has passed through the 618 support of this thrust. Market has moved below the ABCD target, below the monthly pivot support one. So technically there's no reasons to show any bounce and retracement from the lower levels when the market stands in fact in the free space between the 618 support and the low itself. As we have said, based on this possible head and shoulders pattern, we said if market will pass through this support area, that will mean the failure of the right shoulder. In this case, as it usually happens with the head and shoulders patterns, market continuous move right to the bottom of the head, and this probably will happen. The one reason for the possible bounce here that we see is the possible short covering is the preparation for the FOMC meeting. So investors who hold short positions could just contract a bit these positions before the FOMC meeting. That's the single reason why there's any bounce will happen. But this bounce probably will be minor, will be just small bounce. If we will take this extension, it's probably, well, 1270 maybe. We could see this, maybe we will get this retracement. But to count on the possible real significant short covering with this rally to the upside, it's very difficult to do this. Because even announced demand on Asian markets, as Asian traders talk again and again every day, that we see there's some demand on the spot market when the markets drop below the 1265, and we see some purchases. But on taking a look at the chart, I did not see any purchases. Taking a look at the CFTC report, I did not see any purchases. The net long position on the gold market has contracted significantly on the previous week. SPDR fund has lost 10 tons on the previous week in the storages, so that's not the purchases, that's the sell-off. Well, let's see what will happen on the hourly chart. As you can see, market has passed through our potential bottom of the 3 drive, as we said, so market could find here support, and it really has tried to do this. So you can see, we see some minor bounce that market has made an attempt to do, but then market has formed another pattern butterfly drop to the 1618 extension, this retracement. Okay, now is trying to show some retracement. This reminds, guys, by the way, some sort of the Russian rinse, because there's really a fast move down and fast move up. On the forward time frame chart, see this very similar to the Russian rinse action. So bullish engulfing right at the bottom here. As I said, maybe market could form some retracement, but hardly it will be significant. Currently, guys, any retracement up probably should be used for and should be treated as the potential for the entry on the short side of the market. And as I said, we could probably and would treat the hints on the possible more hawkish policy from the Fed as the rammer, but or as a ducktail. But if we wouldn't get the action that we see right now on the stocks, on the bonds, on the forex, and so wide action that supports this rumor, makes me think that this is probably not just a rumor. That would be the truth. And at least we assess the chances on the real changing in the rhetoric from the Fed in a favor of the more hawkish policy on the common FOMC meeting is really significant. And that really could crush the gold even more in the downward action right to the crucial break-even levels of the gold mining on the gold mining expandings that gold mining companies carry when they extract gold from the mines. So really market could reach these levels. That's in the area around 1,100 bucks per troy ounce. So this really could happen. So currently, guys, in fact, I think that the gold market really could continue to move down in the medium-term perspective, and we really could see the levels that we haven't seen for the long time ago.